Hi there, and today I'm going to talk about Britain's finances, what's going to happen to the economy, and whether you should be worried. Needless to say, I think you should. I am. Please excuse me if sometimes my eyes wander. I have some notes on the screen, and unlike President Obama, I don't have a terribly expensive teleprompter. All I've got is my TV. I'm also going to be using a keyboard sometimes. So, what's all this about? An economic recession? Well, I think you can see it all around us. The government is saying inflation is at 2.5%. Well, sorry, but in the real world, I can see food prices that have doubled in the last 2 years. Yep, once again the government is kind of lying to us. Now, the coalition has spent the last 2 years desperately and very publicly trying to get our finances in order. We've heard lots of talk about an austerity budget, and we've had tax hikes, and we've had cuts in services and cuts in all sorts of things apart from apparently the civil service. We have several million civil servants, and at one time we used to run half the world on less than 500,000, so never mind. However, despite all this talk and all this rhetoric from our politicians, our national debt is still growing at a ludicrous rate. Now, David Cameron is going to add an estimated 700 billion to the national debt in just 5 years. Now that's more than Tony Blair and Gordon Brown added to the national debt in 11 years. In fact, it's more than Prime Ministers in the previous 100 years added to the national debt. And a lot of the reason for this is that our debt has now grown so huge that we can barely afford the interest rate on the repayments. And if we want to borrow more, which incidentally we are doing every day, then we end up paying more interest. And we all know that only goes one way. You can think of Britain as somebody who's already gone bankrupt but doesn't really realise it. Except that the politicians really do realise it. They just don't tell us. Because if they told us the real state of affairs, then they would be out of office in a heartbeat. Now, compared to the size of our economy, we are now one of the most heavily indebted countries in the Western world. And that's official. Our debts stand at more than 5 times what our entire economy is worth, but it's worse than that. If you include all the things that our government has promised to do over the next few years, our debt goes up to 10 times, well, a little under 10 times what our economy is worth. That's ridiculous. That is like someone who has a £10,000 salary taking out a £100,000 mortgage. They'd never be able to afford the repayments. Not that anyone would lend that to them. However, people seem quite happy to lend countries an awful lot of money for some peculiar reason. So what is the result of this going to be? Well, we've seen it already. We've seen one country recently where this has happened. And what actually happens is that people don't wish to lend to the country. They then put up the interest rates, and the interest rates climb at an astonishing rate. And that country, of course, is Greece. Now, people who aren't Greek don't realise exactly what happened. And what actually happened is at one point Greece was borrowing money at a rate of 1%, which is around about what Britain manages. Now that means every year they had to pay off 1% of their national debt, which was manageable for Greece for a while. Then one year they had problems doing it. Suddenly people were putting up the interest rate to 2%. Do you think the Greeks could afford that? No. In fact, before the European Union stepped in, the interest rate that Greece was being offered on loans was 156% if they wanted any more money. Can you imagine that? If we have a 10 billion national debt, 157% would mean we'd have to pay 15.7 billion every year just to keep going. It's ridiculous. So of course the Greek financial system collapses. And this is going to happen worldwide, and it's what they are calling the World Economic Reset. That's because everyone owes everyone else so much money that they can't afford to repay it. Now, this has happened. It's not a conspiracy theory. It's not just happened in Greece. This has actually happened 6 times over the course of known history, starting once again with Greece actually, in 500 BC and going on through the Roman Empire. Did you know that the Dutch guilder was once the reserve currency for the world, and every country was trading in Dutch guilders? The same goes with the French franc. And of course, before the dollar, the British pound was the reserve currency, the global reserve currency. Everyone did international trade in pounds sterling. Yeah, but you think, well, you know, we're not too bad now. No, we're not too bad now. We survived that. Do you know how we survived it? We survived it by a little thing called World War II. And this is what tends to happen. During times of economic unrest, you get civil disturbances, you get wars, you get all sorts of things that wouldn't normally happen. And killing a few million people is certainly one way out of an economic problem. Everyone tends to forget their issues. They forget everything. And people say to themselves, oh yes, we've got to starve, we've got to live on rations for 20 years because we had this terrible war. Rubbish, it's not because you had that terrible war. It's because your economy collapsed. So we were still the reserve currency after the war for a little while. Then the US dollar took over, and then Mr. Kissinger did his famous talks with the petrodollar, and everything in the garden was rosy until it happens again, and it's just about to happen again. So this is not just going to affect Britain, it's going to affect the whole world, and it's going to happen at different times for different countries. Greece, as we've seen, is first. Paradoxically, there's one country where it might not happen at all, and that country is Iceland. Do you know why? The reason why is because they did not bail out their national central bank. They let all of the banks that caused the problems for Iceland collapse. They said, you've made a mistake, bye bye. And now, look at Iceland. It's got a booming economy. It's doing very well. In fact, it's one of the best countries in the world economically. Britain, however, didn't do that. Britain said, oh no, we can't have the banks collapse. You're a major source of income. What we'll do is we'll give you lots and lots of money. So every man, woman and youth in the country of working age contributed, without their knowing it or without their consenting even, around about £250 to bail out the banks. And the government now owns the bank, or part of them. So why did not the government redistribute their ownership in the bank, which obviously is share based, to all the people who really paid? Answer: they'd very much like to sell those shares and recoup some money to pay off some of the national debt. Never mind. Right, so what is likely to happen in Britain? Well, all these things follow the same pattern, and you don't have to take my word for it. You can look at the experts. There's a lot of experts, some of them real, some of them fake, but there's a magazine called Money Week, and you can look. They have a video, they have some articles on this, and you don't have to take my word for this, but what is actually going to happen, and this is a certainty. Okay, the timing, who knows? It's unlikely to be more than 2 years. It's unlikely to be less than 3 months. The gut feel from a lot of the people who should know, including a friend of mine who's a merchant banker, is that they're surprised the system is actually still working. In other words, a lot of the bankers think it should have happened already. And the reason it hasn't happened is that the banks are lying. They're lying about how much assets they've got. A lot of experts, for example, have called HSBC technically bankrupt because it's real assets as opposed to bogus ones, and adjusted accounting and all those nice little tricks that they like to play actually don't cover its outgoings. And that's a pretty scary thought, because this will be the first thing that happens. You'll go to the cash machine to take money out and you can't do it. And the reason you can't do it is there's no money in the bank. And you say, well, hang on a minute, I've got an account with that bank and that account has got £12,000 in it. Well, I'm sorry to say that when you deposit money with a bank, it is no longer your money. And this is quite a new thing. But you will find that all of the banks have sneakily changed their terms and conditions to include a little thing that was invented by the Bank of England specifically to allow things like the Greek, what they call a bail-in, where the bank basically steals its customers' money, to occur. The next thing that will happen is that the bank will reinstate your balance, because it's going to look better if they do. And they will do what the banks in Greece and the banks in Argentina did, and they will say to you there's a limit on how much you can withdraw every day. It doesn't matter if you've got £1 million in there, you can only withdraw X amount a day. It might be £200 or £150, or it might be less. We don't know, because in reality the terms and conditions that you've signed up to with your bank account means the bank doesn't have to give you anything. Think about that. Politically, however, it's unlikely they'll do that. It's more likely what will happen is what happened in Greece, where the bank basically stole around about 40%. Originally they said it was only going to be about 7%. They stole around about 40% of the depositors' funds and gave them some rather worthless shares in an almost bankrupt bank in exchange, but not at the price they were being traded at. Sorry to track it. Not at the price that they were being traded at. So you got to suddenly own inflated priced shares in a bank that was bust. Very good. It's good value, good trade for you. not. So that is likely to happen over here. But there will still be capital controls. Basically, if you've got savings in the bank, they won't act as a cushion. Well, they will act as a cushion, a nice soft fluffy one for the bank. They won't act as a cushion for you. Now, the next thing that's going to happen is that the stock exchange will suspend trading. This is because the currency values have gone haywire, and it's very difficult to price stock when 1 minute the pound is buying X amount, and the next minute it's buying X times 3 amount, and the next minute it's buying X divided by 100. You just can't do it. So they will suspend trading. Now what does that mean? Well, think about what you've got that is sensitive to stocks and shares. You might think nothing, but do you own an insurance policy? Do you own a pension? Are you reliant on an income from that pension? If the answer to these are yes, then the stock exchange suspending trading is a very big deal for you. The next thing that will happen after that is the property market will crash, and this will be the mother of all crashes, and it always happens. This always happens during an economic reset, and the reason why is that people can't afford their mortgages. The banks foreclose. The price of the properties get sold at auction at ludicrously low prices, and so the property market as a whole takes a big nosedive, with properties going down. Well, immediately after the war, properties in England were next to worthless compared to what they were worth just before. So the value that's tied up in your property won't do you any good, because you won't be able to sell it at anything like the price you think you would. So whether you live in a £2 million Mayfair mansion or a £7,000 hovel in Leeds, the result will be the same. You will have a big problem. Now, how long will all this go on? We don't know. The truth is, the evidence from past economic resets, Greece was quite a short one. The problems in Greece, the really, really bad problems, lasted about 3 or 4 months. However, the business of bank bail-ins and restricted drawing and all the rest of it is still going on. So you can't really say that the problem's gone. It's just eased off. People can actually now afford to eat. Granny had to do without her pension for nearly a year, and was supported hopefully by her family members. Either that, or she is one of the many old people in Greece who died of malnutrition. The same thing happened in Argentina. The most vulnerable people are pensioners. And regularly, after a really big drop in the stock markets, as it's going to happen, your pension is going to lose around 50% of its value, and then on top of that the currency is going to lose a lot of its purchasing power. If indeed the currency still exists, the British pound may no longer exist, or not in the form that we know. So what can you do about this? It's very difficult. It's very, very difficult indeed. Now, one of the obvious first things to do is to keep some cash. Now, cash isn't going to be worth much for very long after this happens, obviously. In fact, if it's a really, really bad one, the cash may no longer be legal tender a month or two after. So don't go taking out £10,000 and sticking it under your mattress, because that will do you very little good. The sort of cash you want is enough to tide you over for a week. It's unlikely that the banks will totally block access to the cash machines for longer than a few days. Why do they do it? Well, they need to block access to the cash machines so that the accounts are stable. This lets them actually calculate what each account is worth, decide how much money they're going to steal, and do all the sums that they need to do to ensure that they survive. Because that money is the bank's once you deposit it, and not yours, and the banks are not concerned about your survival, they are concerned about their survival. Are banks a bad thing? Not when they're run properly. If they're run on Victorian lines with Victorian values, they're a fine institution. But when they are run by greedy, manipulative people who just want a quick buck, then I'm afraid they are a very bad idea. So that's the first thing you should do. Take some cash out and put it aside. The next thing is going to sound a little crazy. You need to stock up on precious metals, gold and silver being the two top ones, simply because everyone recognises them. They're very easy to trade for other things, they're very easy to cash in if the sort of economic reset doesn't last all that long. And gold, as sure as eggs is eggs, if this happens, is going to soar in value. There's a lot of indications that this is happening already. Of course, gold has been made artificially cheaper recently due to some manipulation in the marketplace. There's reasons for this, which I might do another video on, but basically gold at the moment is actually a lot cheaper than it should be, although it's $1,300 an ounce. A gold sovereign now will cost you around about £199 as opposed to £240 some 3-4 years ago. However, you have to take this loss of value of gold that there's been with a big pinch of salt, because the market has been driven down. Same goes with silver. So what I'd suggest you do is that you do what all the big people are doing. Now, have you noticed that recently all over the UK, over the last few years, in the high streets there's been shops that buy gold? I mean, there's always been a few, but now you can't move without tripping over them. Why is this? This is because all of the people with a huge amount of wealth want to convert that wealth into gold as quickly as possible, and they're trying to do it without the government realising just how much they've converted. Because what they're also worried about is what happened in America in the 1970s when the dollar had the crisis, and America turned around and said to its citizens, if you've got gold, we want it. America came within an ace of declaring that it was actually illegal to have any gold. They didn't actually do that, but it was talked about. Who's to say what will happen in this country? Now, officially, when you buy gold in this country, if you invest more than £3,000 in a year in gold, you're actually supposed to declare it. Why? Well, why? I think you can guess that one. But there's lots of places you can buy gold where the government doesn't necessarily have to know about it. What sort of gold to buy? What coins is the best? Same with silver. Reason why is they're small, they're in sizes that everyone knows about, people know what the values are. You can look online at any time just to see how much a particular item in gold is worth, and the same goes with silver. Now, why am I saying gold and silver? Well, you wouldn't like to take a gold sovereign, which is worth around about 4 or 5 times your weekly shop, down to the supermarket and pay for some food. What are they going to give you in change for it? Is your local supermarket even going to accept it? Possibly not. But you can also go outside your town and go to the local farm shop, which probably will. And this always happens as well during these economic resets. A barter economy takes over. So people are going to barter. So now the next problem you've got, really, after you've sorted out having enough money to live on, the next problem that you've actually got is civil unrest. If you live in a city or a town, you're likely to see problems, as London saw in Tottenham recently, where you have big crowds of rampaging youths and discontented people throwing stones, getting arrested by the police, not getting arrested by the police, beating people up, killing people, robbing them, mugging them, looting shops, and so on and so forth. This is very likely to occur if you live in a big town or city. So I'm going to suggest that you put in a bit of a food stock, not much, enough for a couple of weeks. And the reason why is it will take time for the civil unrest side of things to be dealt with. That's assuming the government does actually deal with it. That's assuming they can afford to pay the police to deal with it. But in any rate, when you actually look at big crises that have happened on the world stage, normally after 2 weeks it's safe to go out of your front door. But during that 2-week period, I wouldn't. During that 2-week period, stay at home. Is there going to be electric power? Don't know. Are you going to have internet? Don't know. Are you going to have mobile phone access? Don't know. The one thing I would suggest you do is to buy a hand cranked radio, just in case. That's all it is, just in case. You know? I mean, the entire world is not going to fall apart. Let's get this straight. We're not all going to be living in caves, eating raspberries and grubs. Things are going to recover, and they'll recover fairly quickly because we're a modern society. However, until they recover, things are going to be very, very bad. In fact, if you have parents who lived through the Second World War and the Blitz, ask them what that was like. Things are going to be about the same, maybe slightly worse. Look at the pictures taken in the Crimea recently. That is what we're talking about, really. The pictures in Libya, the pictures in Greece. You can find plenty of reference material on YouTube and in more official publications that will show you exactly what living through a period of unrest is like. And really, I would suggest that's what you prepare for. So to recap, put a bit of money aside, not very much. Convert what you can of your savings, assuming you have savings, into gold and silver. Otherwise, put in a little bit of food. Make sure you've got a bit more stock than usual, not months worth. A couple of weeks should be fine. And you should be quite well set to live through this without, I won't say without too much disruption. You're going to have a hell of a lot of disruption, but without it being a big issue to your health or sanity. It's not going to be easy. When it's going to happen, as I say, I don't know, the experts don't know, but an awful lot of the experts seem to be surprised it hasn't happened already. Sorry to be possibly the bearer of bad news in your day. However, it's not all doom and gloom. I'm sure we'll all pull through it. Thanks very much. See you again soon. Bye.